Hi everyone, Basil, Chapman sitting in for Tom O'Brien. My pleasure to be here, and I'm usually doing my show at 11 o'clock till noon, the Tiger Technicians Hour, Monday through Friday at 11 o'clock till noon, as I say. And I'd love to take your calls at 877-927-6648. Let's run the numbers, and the numbers go like this. The Dow is up 67. Let me do them one at a time. Dow is up 67 at 17,545. Now, this is going to be very interesting because the Dow has made a little bit of a U-turn here, and I have something that I call in my proprietary technique that I call the Chapman Wave Dow Quartet Index. And what exactly is that? Well, I've used it for maybe 20 more, even more years, and it goes like this. GE, sometimes I include extras there, but basically the core is GE, and G closed up 13 cents. Nice action today, just a lousy action in the weekly and the monthly, but the daily is starting to improve for a bounce, and that bounce says that it's right at the 200 period moving average of 26.21, and if it can get above 26.40, this rally, counter-trend rally, I call it, could last a little longer. IBM is the second one. IBM, a lousy chart, so that's not going to help very much, but even a point or two in IBM on the upside could help the Dow. You've got Triple M, one of the key American stocks, just a great company, and that's been pummeled since it made 170.50 high back in the, when was that? That was, I think, in May. Let me just double check. That was in March. In March, we went to 170.50 peak. D in the Chapman Wave methodology. And the methodology is very simple. Looks for the lowest, most identifiable bar. In this case, 130.60 made back in October of 2014. And you count each successively higher peak. And each peak goes lettered in an uppercase A, B, C, D. D is what you want to get, the fourth highest peak. At that point, other things can happen. The objective is to get you from a buy signal to a buy mode at going to a D. And it went to 170.50, and it's come down very sharply, but it's taken way more time to come down and not nearly as much as it went up. So that says at this particular point, yes, you could get a counter-trend rally. It's very important. Nice candle today, 146.84. Why is it at 149.28 is really where it closed, and that was up. And the weekly chart says it needs to get above 152.50 to even start making the 9-period exponential moving average, that black line there, a support rather than resistance. So this is just a counter-trend bounce, but it can make a difference. Let's look at UTX. So G is my short-term, one of my indicators. UTX is more intermediate term, and the intermediate term really looks just terrible. But UTX, United Technology, certainly could rally a little bit. This is leg B. Could try to get to the high that was right there at 101.49. It's at 98.14. That's 3 points away. It will certainly help. So this is what I'm going. I'm going to go right back to the Dow, and what I'm going to say is this. I believe this is a counter-trend rally, that the tide has changed, that we're going to low tide. It also says that we had a left side, right side price time match. Let me quickly explain what that is here. In the Dow's where I show my subscribers to my opening call, my daily newsletter, very comprehensive newsletter. And we go through the Chapman Wave methodology and the charts every single day. I give an explanation, then another explanation, and then many, many other charts that go with it, plus my Trader's Corner where we have our positions. And I show the stops and the buy stops and the entry points, etc. So this is a leg B. That light blue line there is the 200-period moving average at 17,682. I believe that there's a chance that we're going to get to 17,630s in the next day or so. And if we do that, we could have one quick pop to the 17,000 upper 17,600s. I'm not sure about the 17,700s yet, but that would be very important if it can get there. And the high that was made at 17,629 on the 10th of August, that would be a focal point at this particular time. Support between 17,490 and 17,440 at this particular time in the Dow. I believe we tested today's sharp sell-off at the opening and very nice close. That's a big positive on the shorter term. Let's go back to our story. The S&P, SPX.X, there we go. The S&P was up 10.90 at 2102. Very strong leg B, so this is what I call a gray B, meaning it is under the previous high, and that high was 2132.82, which was underneath the all-time high of 2134.72. And we're going to be watching this closely because the daily chart just broke a resistance point And the weekly chart really is, I can consider this to be more an oval pattern. So far, that's very positive action. And the monthly chart, I didn't show on the Dow. The Dow is much weaker than the S&P. So the S&P in leg C in the 120-minute chart, this little bottom right corner, says that the very near term is still strong, trying to test the 2105s. And the daily is just broken out. And that the MACD hasn't yet crossed positive, but it's just about to. The stochastic's okay at 56%. So I'm suspecting further upside, and I'm going to draw this in right now. I'm suspecting we've got another H pattern right here. Maybe it'll be a little higher. I'm going to put it right there. Okay, so that's it. So the parameters are a break above 2106s will target the 2111 to 2112 area. A slide underneath 2092, the 9-period moving average, is very negative because it'll suggest you're going right back to the 2080s. So that's that. Let's go to the IWM. The IWM right now, the Russell 2000, leg C in the peak C in the 120-minute chart, leg B in the daily, and a rebound, just a rebound in the weekly chart. So it's still negative, but once again, I'm going to draw two patterns. One is there's a cup formation right there, and it's almost like a V. And then I'm going to say, this is what I'm anticipating, that we're at it a little bit longer, and that by Wednesday afternoon, Thursday morning, we get the real proof of evidence whether or not this is going to be a stronger retracement rally, or whether we fail in the 123 to 120, between 124 and 123 in the IWM. So that's that. Now let's go to gold. GC, this is gold. Closed up forward, was actually quite a bit higher earlier. It's holding quite nicely. The weekly chart is suggesting it's trying to form some kind of a base that makes this arch, another arch formation. It's at 1,117. If it goes a little bit above 100, I keep saying 100, it's 1126.30. If it goes to the 1126.50, 70 area, that'll be very positive, and that will suggest that it's leg B, and we are going to get a larger arch formation in the weekly chart. Monthly chart is still just terrible. Okay, let's go to silver quickly. Silver is right there. Silver was up 0.09. It's already gone to a peak E, so it might stall a little bit here. But so far, this is quite nice action. And the weekly chart is improving. So silver actually is a little bit stronger than gold. There's also a cup formation there. And we want to go to the dollar DXY. The dollar is hit the 9-period moving average resistance at 96.91 this morning and pulled back. But it is trying to rally. So my thinking here is that the dollar has a little bit of consolidating to do, and gold could improve a little bit, and we're going to watch 96 support very closely. Basil Chapman sitting in for Tom O'Brien. We'll look at bonds when we get back, and we will go to our interview. Thank you. We'll be right back straight after these messages.